This is Steve Connolly for Willby LLC, and I'd like to introduce you to the world of private lending. So, Will Rogers said that I am really more interested in the return of my principal, and then I will be interested in a return on my principal. So, what I'm talking about here is highly secured investing with higher rates of return. Now, if you're looking for something with high security and super high rates of return, we don't have that. I don't know if that exists really in the world. However, if you are looking for something that is highly secured with real estate, then you're at the right place. So if this is of interest to you, please stay tuned and we'll get into some more details about this and why it might make sense for you to join the world of private lending for high security and higher and better than average rates of return.
Welcome to our private lending program, private lending for high security and high rates of return. Real estate investing for the hands-off investor. Secure, turnkey, high yield. So imagine you've probably wanted to be a real estate investor for a long time, but you really didn't have that much interest in buying properties, learning the values, fixing them up, painting them, cleaning them. You certainly didn't have any interest in that. And you're probably not interested in dealing with and trying to find tenants and collect rent, all that sort of thing that is involved in real estate and real estate investing. So imagine that there's a way for you to do this, which is simply looking at an overall transaction. Then you say, I want to do this. You go down to the bank, you wire your funds to a closing attorney. They make sure that you're well secured in the property, and then you just sit back and collect your check every month. You get a very high rate of return without doing much. I'm Steve Connolly, manager member of Willby LLC, and that's the company that we do a lot of our investing in. It's been around for a number of years, about 6 or 7 years, incorporated in 2017. Myself and Jason O'Miles are partners in that. We have a combined experience of over 60 years. That's a lot. And we bring in a lot of other people that help us in our combined experiences, certainly well over 100 years in real estate investing, with all of the assets and mind assets that I'm talking about that contribute to the overall success of what we do. This is our agenda today. It's the private investor program. It is what you will be getting and how the process works. Then we're going to talk briefly about the company and the company overview, history, and the dream team, and then what to do next. Where do you invest your money now? Well, you probably invested in the stock market, stock market and the bonds market and the CDs from your bank, or maybe a money market or commodities. There are credit card companies and other companies that offer very high rates of return. So right now, the interest rates are very good, but you're leaving money on the table, and very secure money on the table as well. You could be earning a lot more without the sacrifice of security. Here's our program. We guarantee you 8 to 10% simple interest on the amount that you invest over a 5-year period. We won't lower your rate as long as your money is invested in a project of ours, or we have the opportunity to roll it into a new project in case we have a tenant buyer that ends up buying the property. Here's an overview of our process. We buy and we renovate properties. Now, we're not looking for any major renovations. We really want the fluff and buff properties. Fluff and buff means we're going to go in and paint, carpet, fix the heat and air, make it look pretty, that sort of thing. Once we renovate these properties, then we turn it over to our management team and they find a great qualified tenant for these properties. And right now, we're getting very high rental rates. And with this particular economy, we're getting great deals on properties because interest rates, while they're high and they're great for cash investors, are not good for home buyers. And so that means that property prices are coming down across the nation. So we pay you a great interest rate because we're collecting great rental payments. It's really a simple plan. It only takes someone who is experienced to recognize the opportunities and take the action to benefit the people who are involved. Here's how it works. Again, it's very simple. We locate a property we want to buy. Those are easy for us. A lot of people have a hard time, but it's just our decades of experience that have made it quite easy for us to recognize a great opportunity for us. You know, it's a gift from years of experience, but it's also a curse. But and the reason I say that is because we see a lot of people who are just confused and scared. And that's what this marketplace is all about. People are afraid to buy right now because they're thinking interest rates are going to go up. How can they sell the property? Well, if we have a long-term plan, we don't care if we sell the property right now. We're just looking to get a great value right now. So we purchase those properties, which are plentiful, and they're getting more and more plentiful as time goes on, as we move into this economy. We renovate them, we notify the management company, and then they locate a tenant. The availability of cash is key to buying at a discount and taking advantage of all these great opportunities. Here's another graphic that really just shows that really the same thing I just said. We purchased the house. That's an example of one right there that we bought a few years ago. We put a management team on it. They put the tenant in it and collect the rent, handle all the rent payments and any of the tenant issues for us. We turn around and then pay you 8% to 10% interest depending on how much money you have to invest. And then this graphic for the deed that's up there is really important because the deed is what really is the security for you. Now, of course, we get the deed, you get a security deed. That's what we call it in Georgia, a security deed, which ties your investment to the property ownership. So that's your collateral. Some states call this a deed of trust. Most people know it as a mortgage. So really, you're the bank. So here's an example of a $200,000 purchase. A $200,000 investment at 8% will yield you about $16,000 a year. A bank CD right now is paying 5.3%, or on a $200,000 example, that would be $10,600 per year. That's a difference of the 8% that we pay and the 5.3% that someone is getting on a CD or a money market investment of $5,400 per year. That's a lot of money. That's the money I was talking about that you're leaving on the table. That's $27,000 over a 5-year period. That might be too much money to be leaving laying around. Our target property might look like this. We purchase a property at $200,000. Maybe there's repair costs of 20, 30, 40, 50. Our example here shows 50,000. So that's a $250,000 investment. At 8%, that's $1,666 per month. Now, we will rent that house between $3,000 and $3,500 a month. Hey, that's where we're getting the money to pay this 8% or maybe 10% interest on the money invested in these properties. Now, naturally, we're going to have a few more expenses involved in this, like management fees, vacancy rates, repairs and maintenance, taxes, insurance, and so forth. But there is enough money to pay you your interest rate. The biggest concern that you will have, of course, is the protection of your asset, the money you've invested. So in addition to the security and the collateral, so what is the collateral? Well, here's the collateral. It's the property that the money is tied to. And so we don't exceed 75% of the purchase of the value of the property. So in other words, we're leaving a solid 25% equity in that property. And that's in case things go wrong and the property values go down. You're still going to have 25% of extra equity in this property to protect the money invested. So you start with a property that has a current market value of 25% more than the money invested in it. That's additional security. Here's just a simple graphic that will show you even better what that means. So at 75% loan to value, of course the property value is 100%, but we will only put 75% money invested into that property, leaving 25% extra equity to protect our investors. We don't violate this rule. On our investor guidelines, which is the amount of money that someone might have or wish to invest, anything over 100,000 and above gets two things. They get a first position or first mortgage on the property against the property as a first lien position. We pay 8% on that because they have a first position and there's slightly more security in a first position. We pay 10% to our investors that invest less than 100,000. This is not a hard and fast rule. Depends on the purchase price of the property and other parameters and where that money's going. But the lesser amounts of money generally are in a second position because it's hard to find a house under $100,000 that doesn't need a lot of work. So that means we're paying $100,000, $200,000, $300,000 for these properties, and that money that is less than 100 makes it harder for us to purchase those and put those amounts of money to work on the purchase of these houses and keep them in the first position. So those are second position. However, we pay 10% on those investments, and we are looking for accredited investors only, please. So if you have IRA money, we can work with that. Now, the first thing that would have to happen, though, is it would have to be converted by you over to a self-directed IRA. So our third-party administrator for the self-directed IRAs is Advanta. Now, you can use Equity Trust. There's other companies out there that are all reputable companies. That is totally up to you. Who sells us houses? Well, most anybody and everyone, as long as they meet our project parameters. Banks sell our houses. Of course, they have an inventory called REOs. That's real estate owned by banks. Most commonly, referred to or known as bank foreclosures. They want to get rid of those houses. They're assets for us, but for the bank, those are liabilities. They do not want them. So they will get rid of those and convert them to cash as fast as they possibly can. Private individuals sell us houses because people have change of life situations, such as health issues. Maybe they're transferred out of their job. Maybe they're divorce situation. Maybe they're laid off and they run out of money and they can't afford it anymore. There are plenty of reasons why people sell their houses. That is not a problem. I've always said people can mess up houses faster than all the investors out there can fix them up and get them back out on the market. And then, of course, there's realtors who have clients that can't sell their houses. So we have a number of realtors that contact us on a regular basis that say, hey, can you take this house? Can you help us move it? Can you help us get our clients satisfied and so they can move on with whatever they need to do in their lives? And then there are those people who rent houses. So who are the people who rent houses from us? Well, this market has created some really unique opportunities. With the high interest rates, that's great for you as investors, but for people who are looking to buy houses, it's not so great because now they're looking at 8+% interest, where a short time ago they were looking at 2, 3, 4% interest. There's a big difference there. So a lot of people now can't qualify, so now they're renting houses. So the demand is still there, but the housing supply is either short supply or converting because now people can't sell their houses. They might be not interested in renting them, so they sell them to us. We're interested in renting them, and so that just converts those houses to rentals. And so there's plenty of people who want to rent houses. Many of those will become first-time home buyers. Many will just stay in there and just rent forever. Of course, some will move on and do different things. I know people who have rented apartments for over 20 years. They're perfectly happy with that. One of our goals is to find tenants that might want to become first-time home buyers. So we do a rent-to-own program, which is they rent from us for a while. We help them get their paperwork or their credit straight, and then they convert to buying. They rent to own. That's what the rent-to-own program is. So people who buy our houses want to achieve the American dream. Pretty obvious, right? And some people just want to rent, and that's just fine. Next is the company overview, and then right after that will be the dream team, and then right after that will be, what do you do next? Our company story is we have well over 60 years of combined experience, and as the principals, frankly, we know what to do. Our goal is to grow this company with the help of you and people like you who wish to get high rates of return. And we're going to do that with the private lending and our knowledge base of the real estate market as it is. And as we transition into this new economy, creating substantial opportunities that we're really excited about. At the same time, we're going to create great cash flows, help people become first-time home buyers, help people with get sober housing where we get high rates of rental income as people transition back into society, and we'll be doing some Airbnb as well. Will Buy is a private for-profit company incorporated in 2017. Of course, my partner and I, Jason O'Miles, we've been doing this for over 60 years combined, probably actually a little more than that. We acquire, rehab, lease, residential, and at times commercial real estate. Our competitive advantage, or basically our unfair competitive advantages, we have speed to purchase by utilization of private funds, and we know the real estate trends and opportunities that are out there. Unlike a lot of investors, we've been through multiple cycles. We have seen the 2008, 2009 economic downturn. We have seen the RTC of the 70s era. We have seen the recessions over the past several decades. Now we are just experiencing another transition. And that gives us a very unique perspective and viewpoint of the opportunities that await us in the next coming year. Why are we doing this? Well, there are a lot of properties on the market that investors simply just don't know what to do with. Well, we do. I mean, while a lot of people right now are afraid because interest rates are going up, interest rates have been going up. Can they buy a property as an investor and then turn around and be able to resell it in the marketplace? They don't know. So that means that they're in paralysis right now. Well, we're not. We're in the buying mode because we're seeing excellent opportunities and we know what to do with them because we're going to take those great deals. So we're going to put tenants in those properties that will pay high rents that will in turn allow us to pay you a high rate of return on your investment. So the market has driven the prices down. The supply is limited. More people are renting. Hey, that just spells opportunity. And so we recognize these properties as they exist. It's really a gift and it's a curse. So in a way, this is kind of like a photo interlude. These are some houses that we purchased. Some of these we've used on the private lending program and thought they'd be fun to look at. Critical success factors makes our company unique. We have systems, speed, and knowledge. And what makes our company successful is we have teamwork, drive, focus, and we're hard at work every day. And we love what we do. So what is the next step? By now you know our program. I've kind of gone over it a couple times, 8 to 10% secured by real estate. We just want a chance to answer any questions you might have. Make the decision now. We're not asking you to make a financial commitment or decision right now because we need to pair you up with a very specific project that fits your financial needs. But we are saying make a commitment now to create a private meeting. Set up an appointment with us today. The next step is fill out in the form the amount that you wish to invest. Now the form is either going to be in the box above me or in the description below me. Just click that and you can fill that out, send it in. It's a simple form. It's just name, phone number, email address, and how much you might have available to invest. Then we'll contact you. Or you can click the Calendly link in the description below, set up an appointment, and we'll get with you on that day with a Zoom call or a phone call, whichever you wish, and we can talk about what to do next and what questions you might have that need to get answered. We hope you enjoyed this presentation, and even more, we hope you enjoy being a part of our team, and we hope you join our team. You'll be glad you did, and you'll thank me later.